This is the mortgage housing update as of April 6, 2026, and let's go through the rates. So according to Freddie Mac, we are hovering around 6.46 as of last week, and according to Mortgage News Daily, 6.45 for your 30-year conventional conforming loans, and for your FHA, 5.91. So if you have a loan amount $400,000, you're looking at your principal and interest around $2,500 for your 30-year conventional conforming loans and $2,375 for your FHA. Okay. So last Friday, right, that passed, we received unemployment rate and it dropped to 4.3. Right, so that's a good sign for the economy. That means we have less people that's unemployed, right? That's a good sign for the economy, but not so good if you're waiting for the rates to come down, because now Fed is going to be in that dilemma where they cannot cut any rates because they're, already hovering around where they want to be for their unemployment, below 5%, and it's trending downwards, right? But there's a pretty big data that's coming out on Thursday and Friday. This is your PCE and your CPI reports. Both of them are very important when it comes to rates, and we're going to see how bond market reacts to that. So as of today, the bond market is up around 10 basis points. So hopefully the rates come down a little bit, and your 10-year Treasury is also down around 2 basis points. That's a good sign for the rates. And the last thing we want to go through is how much house can you afford. We're going to run through different scenarios. Let's say you're a single person making around $60,000, no other co-borrowers, and you have around $50,000 for your down payment. At 49% DTI, you can probably buy a condo or a co-op at this stage around $300,000, right? Now, let's say you add a co-borrower that's making $40,000. Now, if everything else stays the same, you can find a house that's going to be around $548,000. And let's say you want to buy a two-family where the second floor is going to bring in, let's say, $2,500, or we can put $2,000 for now. And now you can find a two-family around $690,000 property. On the other hand, if you want this number to decrease, that will depend on your debt. Let's say you have a car payment that's $500 monthly payment. Now your affordability drops to $617,000. If you have student loans or if you have credit cards, a lot of credit card debt, and let's say you have to pay minimum payments of $300 on all your credit cards collectively, then your affordability drops to $574,000. So as you can see, there's many factors when it comes to your affordability. If you want to run your numbers, please get in touch.